Welcome back to another episode of Ready Set Podcast. My name's Angus.
I'm Derek, and we're joined by two guests today.
Yeah, I know. Back at it again with Dom.
Hello.
And we got another special guest. It's Caroline.
Hi.
And so she is a mortgage specialist, right?
Or mortgage broker.
Mortgage broker. She's her own boss. She helps people get all the good deals out there. And what got you started being a mortgage broker?
Slash specialist.
I was working at TD for 5 years.
Mm-hmm.
And the first, I started as a financial advisor. Then I got into mortgages. Because when I was a advisors, we learned investments, mortgages, and also management. But I like the idea of people coming to me asking for money.
Yes, you are your own boss.
I like that. So that's why I prefer mortgages over investments and management.
Mm-hmm.
And 3 years mortgage specialist at TD. Then I decided to become a mortgage broker.
Mm-hmm.
Left TD because I can offer more options, more choices, and more solutions for my clients instead of referring out. Because when I was at TD, I could only do TD mortgages.
Mm-hmm.
Yeah. Now I have access to A lenders, B lenders, private, commercials, industrial, every single criteria. So if anyone needs money, they come to me. One-stop solutions.
Yeah. I heard to get the license is hard, right? To be a broker?
Yes, we do need a license.
Yeah.
I studied for about 2 months to get my license.
Oh, okay. Sorry.
And then it's a lot of courses mainly about anti-money laundering.
Mm.
That is a really big topic. And also how we do compliance, how we review, do our diligence for clients' documents to make sure that we presented a good case and also a valid case for the lenders to consider.
I know Derek has a lot of pet peeves. Is it pet peeves?
I guess
What grinds your gears?
It's a lot of stuff from social media. But I wanted to ask you: are more of your people that come to you, are they more personal loans, or are they more business loans?
Mostly residential mortgages.
Mostly residential mortgages.
Yeah, people are they're buying a pre-sale, existing properties, or refinancing to get more equity out, or consolidating the loans, debts. That's mostly the main business.
Okay. So
What grinds your gears, Derek? I know you want to say it.
So for those of our viewers that don't know, the Bank of Canada recently raised their prime mortgage rate to 5%, right, on the flat. And with that, anybody who has variable rate mortgage, which is a mortgage rate that's not fixed, has gone up. And hey, everybody's complaining about it. Every third post I scroll through on social media is just somebody complaining about their mortgage going up, right? And one of my questions to you is how often does somebody come to you for a personal mortgage that is way under their
earnings?
Deposits?
Oh.
So you know how you're supposed to have a safety deposit? I forgot what it's called. It's usually 20% of the asking.
Yeah.
Down payment. Yeah, there we go. So how many in your experience, how many people are I don't have the down payment, or I'm under the down payment?
There are definitely a lot of first-time home buyers that their down payments are less than 20%. But then there are other benefits as a first-time home buyer, or even if your down payment is less than 20%, that the government does have a subsidy program.
Oh, sure.
That if you put 5%, which is the minimum requirement, then the government can match another 5%.
Really?
Oh.
So that is a new policy, new program that launched about, I think it's about 1 or 2 years now.
Oh.
Did you know that, Derek?
No, I did not know about this.
So it's a good thing that you can take that 5%
Mhm.
to buy your first home with no interest. But the catch would be, even though there's no interest that you need to pay back to the government, but they will take the 5% of the value where you sold it.
Oh, see, there's always a catch.
So yeah, so it would be it would be really good for people who do need like down payment support. Like not all the people have parents' help, right?
Yeah.
So that is a good strategy. And also you can use RSP for up to 35,000 if you're first time home buyers. And yeah.
Oh, okay. Is for that government one, is it only 5% of the asking, or is it however much you put in, they kind of help match it for the
so existing home 5%, pre-sales they can do 10%, but your combined down payment cannot exceed 20%.
Okay.
Yeah, because less than 20%, then that would basically an insured mortgage. An insured mortgage that you will have to pay extra for the mortgage default insurance. Because less down payment, higher risk for the lender, then they will require a default insurance.
Yeah. Yeah. Okay. So yeah. So what I've noticed a lot of, for me, from what I've seen on the pages, it's more like realtors that want to grab headlines. They're always complaining because now that the variable rate mortgage has gone up so much, they're like, oh, how much is your monthly payment to buy this? And so what they've always been doing is they've always been pitting it at the lowest one. So you're 5% down, and they didn't even mention the government matching thing either. And so they're like, oh, if we automatically assume that you only have 5% down of the asking, then they're like, oh, plus your insurance premium for the mortgage, plus strata fees, plus insurance for the home, blah blah blah, is this much. And one of the ones that really got to me was they were like a home that was like 550,000, and they were like, oh, well, if you did all these like at the very, very minimum, it's like, oh, you'd have to pay $3,400 a month ish, right? And then it's like, and then based off of that, they would calculate what kind of income that you would need to make for a whole year in order to afford that home. And I was thinking about myself, and I'm like, if you did your research on like how rates change and you factor that into your risk along with a decent down payment, I don't think that is the proper thing. That's like headline grabbing, right? So I wanted to figure out like whether or not that was actually true, because like that 550,000, he was like, yeah, you have to make 6 figures to afford that. And I was like, that doesn't seem right to afford a 1-bedroom like 550,000-ish mortgage. So like
I would say that before this whole interest rate hike thing, usually how we calculate is estimate when we're talking to a first time home or people who are interested in buying, is like if your annual household income times about 4 to 5, then that would be the maximum mortgage amount you can be qualified, assuming you have no other debts. But if you have student loan, RSP loan, car loan, all those stuff, then it's going to be added back to your additional debts. Then that would change the whole calculation. So in terms of your questions about buying a 550,000, let's say if they want to borrow 500,000,
so like basically like the whole home's worth.
Yeah.
Of a mortgage.
Then basically their annual salary right now, it needs to have at least 100K.
Okay.
So 6 figures, yeah, it's not that too far.
Okay, but I don't like the assumption that they automatically assume that you only have like 5% down. Plus, like they didn't even mention that the government matching one as well. So I was thinking like at a certain point, like that is headline grabbing, and it's
clickbait.
Like, yeah, clickbait. It is literally the realtor version of clickbait.
That's how you get views.
Well, no, because like they're calculated at the minimum, right? Because if you calculate the maximum, you assume that everyone has money to put that money down. right? So it's just like a different way of calculating the same number.
But it's not financially wise to do it. Like if you only have 5% of a down payment, it's like, what makes you think that that should be enough for you to like you carry such a heavy debt plus like,
or you can be qualified for a 95% mortgage.
Yeah.
Right? Not a lot of people can.
Yeah, not a lot of people can, but like that's also one of the my turning points is like financial literacy is like, if you only have 5% down, it feels like that shouldn't be, how do I say this? You shouldn't immediately be thinking I should own my own place, because it's like there's a reason why the initial down payments were originally the 20% mark, right? And that had to have come from some sort of statistics or some sort of calculations where they originally put it down. So if you only have 5% of the 20, that's like a quarter.
Mm-hmm.
And so like, why not do what you do? And obviously you're still saving, right? It's like, do you think you really need to buy now, or would you rather just save up more for the future and borrow less, right? I think a lot of people in 2020, when the mortgage rates, when the prime interest rate was very low, they got, like swept up in the hype, right?
You want to buy a place before it's too late?
Yeah, interest rates are super low, right? And
but
then,
isn't it to the beneficial to get in early? Because they can create that wealth through,
capital gains, everything.
Yeah. You could. And then, but like the biggest portion of that was the variable rates, right?
Mm-hmm.
They got screwed.
Yeah, so everybody got so super screwed because they're like, because whenever you look at the fixed versus variable, fixed is always higher versus the variable, which is lower, right? I think the variable was like 1.98.
I sold at 0.99%.
What?
Really?
0. What?
Oh my god.
0.99%.
0.99. What'd you get yours?
Mine's a fixed.
Yeah,
no, but that was
2.6.
a variable.
Oh, that was a variable.
Yeah.
Wow, 0.99. Bro.
Yeah, so like that's always like very appealing to people, right? Because they look at the numbers, they're like, "Oh, this is so much lower. I can make the payment so much less," right?
But no one expected it with all these rate hikes.
Yeah, but I can't really speak to nowadays, just because 2020 was like one of those
lowest
extreme
points.
years where you're like, I've never seen this since the 60s, 70s. No, that was when they were really high.
It was probably the lowest it's been for
40 years or something.
Yeah.
It's like whenever they were there, right? But I still think that people got so caught up on that they
screwed themselves over.
They borrowed beyond their means, basically. That's what I'm saying right now.
So do you see a lot of like homes getting pushed back out because of it?
We have heard that the lenders are getting the houses back, that because their clients are not be able to afford it anymore. Then basically default the payments, and then the house got foreclosed.
Oh, wow.
Then there are cases that happened, but I wouldn't say it's a lot, because people usually refinance or break that contract and then rather pay 10,000 penalty, but you can lower down your payments by switching into a fixed one.
Yeah,
like that.
Would you suggest that now though, because the fixed rates are pretty high?
Right now we only suggest, so since beginning of the year or closer to last year, and the last year we already started introducing fixed rates only, because variable rates it does have tendency of going high, and we don't predict it's gonna go down anytime soon until maybe 2024, 2025 even now. So for the clients who did get the variable rate for the past 2 years, they were benefit from a lower interest rate back in the time. Now they would just have to be okay with, writing a hike, and then if they're gonna get triggered, so a lot of people probably get triggered already. Triggered meaning that your monthly payments did not change throughout the time that the rate increased, but until the point that your monthly payments cannot cover all the interest anymore, then the bank will automatically change your monthly payments. So while the time that your monthly payment didn't increase, your amortization actually got extended. So some people, usually when we did a mortgage, it's only 25 years or 30 years. Because your principal did not get paid, then your amortization got extended to 50 to 60 years even. That's what I have heard. Then when it got adjusted, they has to go back to where it was supposed to be, 30 years maximum. Then your monthly payment probably double or even triple.
So about the amortization period, somebody mentioned, like I was reading something and they mentioned like Canada doesn't have a limit anymore, or like doesn't have like a cap on the amortization years. Because they were mentioning something about like when you stretch it, you can stretch it to like 90 years, and then it'd be like you're paying for it your whole life at that essentially.
I wouldn't say that's true. But that would probably be, like I said before, that it got extended automatically because you didn't pay enough. But when you need to renew it, that is the moment the bank is gonna bring it back to where you're supposed to be. So no, like you cannot always have like 90 years. No, the bank will not let you do that.
Yeah.
The bank is smarter than us.
He's gonna die before.
You're like, oh, I'm gonna see you in my grave. Bye.
Can we make that 120?
No. Banks always win.
Oh, so I guess right now have like mortgage brokers been feeling the squeeze then, because they're obviously, because of the high mortgage rates, I'm assuming not many people are going to be coming for borrowing money because they
can't afford it.
Well, the houses, the lending rate's so high, so that means you can borrow less than what you can usually borrow based on your income, right?
Yeah. So ever since 2018 that the stress test come out, we are supposed to qualify the client based on the benchmark rate, which is 5.25, or contract rate plus 2%. So if right now all the mortgages are being qualified at contract rate plus 2, because rate is like what, 6.6%, 6.5, then you have to be qualified at 8% or 8.5 or even 9% based on the lender, right? So based on that, then the qualifying rate is higher than the lower mortgage amount that you can be qualified. So in terms of how our business are, we're still quite busy because there's still a lot of demands. People are still buying. This is how Vancouver's residential markets are like.
Special housing market that doesn't apply to everybody else in Canada.
Yeah, and but we also are really large city that a lot of immigrants are here. So the demand is always going to be there.
So, all the locals going to get pushed out.
We're moving out to Langley, guys.
Even Langley's expensive.
Langley's expensive.
Langley's expensive.
Yeah. It's like you're going to move to like Chilliwack.
Oh, yeah.
Abbotsford.
Yeah. Where all the forest fires are.
But
nobody wants to live anymore.
We do see more investors going to Calgary, Edmonton, because there is no property transfer tax there. And the price is a lot cheaper. You can spend $700,000 and buy a house.
Yeah.
Here, you probably have to spend like double, 1.4, 1.5 even to buy a house here.
And it's a pretty small house too, right?
Yeah.
Yeah.
So, but of course, Calgary, there's other factors.
It's far away. It's in the prairies.
Yeah.
Not much to do.
Highway.
Okay, first of all, Calgary's not that bad.
Edmonton is the worst. Edmonton is the one. That's the other one. That's the. They have like the super mall. Oh, did you hear it? They're opening a Universal Studios inside the Edmonton super mall.
Universals in the mall? How can they fit
like actual
Universal?
So they're tearing down the amusement park section of it.
There's an amusement park.
Yeah, so there's a wave pool / amusement park section of the Edmonton super mall, and apparently they're gonna close that off and they're gonna renovate or whatever. It's gonna be a purely indoor Universal Studios.
That sounds lame.
I know. I was like, I don't know. But like, I was like, I guess it's their way of trying to attract more people to come over to Edmonton rather than Calgary. Because they always had it was Calgary that had that promotion where they're like, oh, come live in Calgary, you can afford a house here.
All the tech companies are going over there too.
Yeah, cheaper rents or leases.
Yeah.
No, the rent is expensive there.
Is it?
Rent?
Well, no, the rent is cheap there, but the utilities are expensive.
Utilities.
Really?
Utilities tenants have to pay.
Oh.
So that's why the rent there is so low, because it doesn't cover the utilities.
Right.
That's a pain in the ass.
And yeah, I think the rents are increasing, but not as much as the capital gains. So for investors who go there, usually just get the rental income.
Oh, did you hear about Toronto's condo market crashing?
Yeah.
Yeah, they were like, I was looking at it, I was like, that can't be right. But I
The
guess,
prices going down?
yeah, like Toronto, not like
What's the
outer
reason?
region, Ontario.
Same thing, same as here too. Like the price goes down for like 20%.
What?
well.
Is it just because no one wants to buy condos, or?
People still prefer buy houses.
Yeah.
Right.
Yeah.
And then because they have to, if you look at a gap, like condo versus townhouse versus house. So right now the condo will have to drop in order for more demands for some home buyer to actually buy the condos. And then for people who want to upgrade from condo to townhouse, then they can start doing so. And then if they have the capacity, then they will buy houses, right? So that's why the house is still okay, but condos are going down a little bit because of the demands and supplies too.
We gotta sell our place.
Goodbye, Toronto.
Do that. Especially depending what job you have.
Yeah.
If you move over there, you may not be able to find a job.
That is very true. I heard Toronto or Ontario itself is pretty like renter friendly. It's anti-landlord renter friendly because I think it's because the rules of
Same as BC.
who is the premier there? Doug Ford? Is it Doug Ford? No, it's a new lady now, but Doug Ford was the previous one that implemented all of them. I kept hearing about all those like people, the landlords in Toronto, just getting shut out of their homes because like one, the renters wouldn't pay, and then they like changed the locks or something. But because of the tenancy board takes so long to do anything, they're like they just wait like 6+ months before like they even get a hearing on it. And I was like, oh, that's interesting. So I wasn't sure if, like that played a part of it, or it's just more of like everyone just losing interest in condos now because there's so much extra fees with condos too.
It is.
Especially when you have a swimming pool, the strata.
Oh yeah,
Oh
going
my
through the
God.
roof.
Yeah. Like, I know how long do you think this spike or this rate hike would constantly keep going up? When will it start chilling out?
I think this year is the year that they're gonna start chilling out.
Oh, really?
So at the very beginning, they increased once, they did pause, and they increase again, right? So I think right now they're just gonna watch and see, and then see how the market is gonna react to it, because their main goal is to drop the inflations, right? Because right now inflation is still really high.
Yeah.
So that's why the only solution, the only tool is to increase the interest rate. But since last year, that the amount of increase that they have done, it has caused a lot of Canadians to lose their homes or can't afford anymore, and then that does slow down inflation a bit, but not as much. So that's why this year they just increase it, but the next one will be September. Then we will see how September is gonna react.
Oh, and then they might like raise it again in September.
We don't know.
Oh my God.
So my other question is, so you know how there's a lot of different factors that factor into inflation, right? Do you know if they include the mortgage inflation into there? Like, because when they raise the interest rate, obviously the cost of the mortgage goes up if you have a variable rate, right? So because I heard some of the economists that I saw were like arguing, they're like, well, if you take a look at the inflation numbers, some of it is actually due to the fact that the Bank of Canada raised their mortgage rates and like the variable rates because it's like the cost, right? And then I was like, I don't know if they actually do include the mortgage rates into the inflationary calculations, because all the other ones were like gas which is why like the Ukraine and Russia war was so detrimental to inflation, well, detrimental to us, but increased inflation, was because the price of gas went up so much, right? And then when gas rocketed, that pushed inflation like super high. But now I guess they're somewhat chilling out, and then it's gone back down now. But I was like, oh, I never thought about that. But I was like, I don't think. Do you know?
I don't think they do though, because inflation is based on consumer products, right?
Yeah.
So gas, your living costs, your food. So I think those are what it's based on. And then in order to slow down the inflation is to make sure the people don't spend as much anymore. So that when people don't spend, then people are going to start dropping the price. So,
dude,
that's why they increase the rate. Then there's GIC marketing for 5%.
Yeah.
Right?
You locked in, right? You locked in, right? For GIC?
Yeah, I locked it in because I was like,
5%. That's a lot.
That's a lot.
Dude, we've never seen that in my lifetime, I don't think. In our lifetime? I don't think so, right?
5% is a lot.
That was down there.
Yeah. Back in I think it's like 30, 40 years ago, I think the GIC is even 10%.
Oh, wow.
But mortgage rate was 20%.
Yeah. That's what a lot of the older people were talking about. It's like, back in my day, we were like paying 18 to 20% in mortgage interest rates.
Yeah.
I was like, oh, okay. But you guys still didn't have to borrow that much, you know, for a home, because it was like a home was like what, 200,000.
Yeah.
So I was like, you know, kind of weighing out the difference in calculations. It still doesn't really make sense.
Maybe their minimum wage was also like what, $6
bucks, $5 bucks.
Let's be real though.
But tax was a lot lower, wasn't it, back then?
I don't know. I actually have no idea.
Government won't tell you.
Yeah.
Oh, but one of the other things I really did not like about those TikTok reels is for inflation reasons, people people complaining about how high grocery prices are, right? There are certain people that really like to try and gaslight that. And so I saw this reel the other day, and there's a girl, and she was like saying, man, Vancouver prices are way out of hand. And then she was like showing pictures of different prices. So she showed like a package of chicken breasts for like 2 chicken breasts for like $18. And then
like Whole Foods or something.
And then I'll get to that. So and then so she was like was like organic cherries, and they're like $10 a pound or something like that. And I was like, thank goodness the people in the comments were like
butchering her.
Smarter. Yeah, they're butchering her, because they're like, yo, I shop in Vancouver. I live in Vancouver. There's no way these are the prices. And then some guy pointed out, it's like, you know, she went to Choices, which is like almost equivalent of Whole Foods now.
It's like an urban fare kind of thing.
Yeah, it's like urban fare kind of thing.
For people who don't know what urban fare is, it's like a really expensive market.
Yeah.
Like you just pay double the price for the same thing. I guess the quality's the same.
I mean, you could argue maybe meat quality is a little bit higher depending on the grading, but
just go to Costco then. Damn.
Costco's great.
Yeah. Costco's great quality. You buy in bulk, you save a lot.
Yeah, but there's like she's not the only one. There's so many people that try to gaslight like that too. And I was like, dude,
it gets the views.
I was like, dude, stop gaslighting people. This is so stupid.
I mean, groceries can be expensive depending on what your wages are, right? Like if this person's going like, I make minimum wage and this is a chunk of my wage, I'm like, I get it. It's expensive to live in Vancouver. But like if you're going to the most expensive store and because you need it to be organic and you need it to have like no GMOs and stuff like that.
Is it gluten free?
I'm not gonna shit in gluten free. I can't do that anymore. I'm not allowed. There are people in my life that need it. But like, no, it's just like, you know that like, oh man, this sounds so bad. You know that saying that beggars can't be choosers. Bitch, if you broke, you know, like if you broke, then eat broke food. That's just is what it is, right? Like if you have the money for it, then pay for what you can afford. That's it. That's like, you can complain all you want about the price of the food, but like, honestly, like that shouldn't be the biggest of your worry.
Yeah, it's like, do you really need those cherries to be organic, or can you make do with the regular one?
I need it because it's in season, and I just love cherries.
But organic? Do you need it over organic?
It tastes better.
Oh, okay.
Well, you want a perfectly good farm? You can pay $10 and pick your own.
Yeah. Go all the way over to Abbotsford.
I'm tired though.
Yeah, Richmond has it. You can pick apples and shit. Yeah.
Oh damn.
But yeah, that was I actually learned a lot through all the mortgage rates and
not looking too good for the next few years, guys.
Is the next few years?
I think she said 2025.
Yeah, about like 2 years.
Oh, dude, we got 2 more years of this. Oh god. All right.
Well, you're not buying anyway. You're fine.
What?
Are you buying?
Am I applying?
Are you gonna buy?
Am I gonna buy? Well, I want to buy a house, but I can't afford one. Derek wants a house too.
It's too hot. Not in Vancouver.
Not in Vancouver.
Maybe we'll move to Calgary.
Yeah, I actually thought about like moving to Calgary as well. Can't afford a house here.
Oh, maybe me, you, Ricky, and
But change scenarios.
I'll leave town.
Yeah. But is there anything you want to plug? Like, okay, if someone wants to apply for a mortgage rate, how can they find you?
Yes.
They can find me on Instagram.
Okay.
Which it is?
We want to plug your Instagram?
We'll plug your Instagram into the description. Yeah.
Yeah.
And
They can find me on WeChat, Line, Facebook, any type of social media. You can Google as well. Have a Google profile.
What's the name for it?
Just Caroline Chu, mortgage broker.
All right, you hear it first. All right. So thanks again for coming on this podcast. I hope everyone learned a lot about how screwed we are in Vancouver.
Yes.
But
it's not hard to borrow money. You just need to come find me.
Yeah. And then was it the government gives you 5%?
Yeah.
Yeah. But they take 5% back
when you sell.
When you sell. So you just don't ever sell.
Yeah. And then you get that 5% as a capital gain, right? Or
Yeah.
something like that? Or counts.
Yeah.
You better live in there forever, man.
Yeah.
All right.
But let us know in the comments if you like them organic cherries. Or I don't know if you think things are getting out of hand and what you're doing to make a living here. It's kind of hard.
Yeah. Vancouver life is rough.
Yeah. But let us know. Just give us a like, subscribe, hit that notification button. You can find us on YouTube, TikTok, IG. Everything is in the link tree.
Mm-hmm.
Thanks again for coming on the podcast. And
Thank you for having me.
yeah. And we'll see everyone on the next one.
All right.
All right. Bye.